Oh, how I love that whistle.
I'll blow the whistle.
Lil Jon and the East Side Boys.
I'll blow the whistle. Hey, everybody, and welcome back to Pardon the Price Action. I am JC Parets, and as always, I am joined by Steven Strazza. Let's get right into it. So small caps have been quietly outperforming large caps so far this year. Are the Russell indexes finding support here?
So I think the key point here is go to the next slide. One of these looks different from the rest, right? So small caps have actually been outperforming large caps, like you just mentioned, and value has very much been outperforming growth. So the Russell 2000 Value Index it never violated the lower bounds of its range that it's been trading in since last year, like a lot of other areas, and like its growth, its peers in Russell growth and 1000 index. So that's key information. We were watching this chart for the past few weeks, kind of telling ourselves that if this one also resolved lower because it's been the leader, that would be some very bearish information. It didn't, it dug in. And when you look at the chart above, the first chart of the Russell 2000 IWM, it's probably no coincidence that it's finding support for the second time this year at its AVWAP from the COVID lows.
I think this is a great way to look at it. So, we've talked about this like in bonds. Remember, we were looking at the 5-year yield and we're looking at 30s and 10s. And it's like, well, are 10s going to follow what 30s are doing or 5s are doing, right? And remember with that predicament. And then as it turned out, it ended up following what 5s were doing. This is kind of one of those things. Is the Russell 2000 going to follow what the growth ones are doing? Or is it going to follow what the small cap value is doing? And I think we want to continue to lean on the fact that value has held in there. The Russell 2000 small caps broke down. They confirmed, they finished that top. And the value, small cap value, did not. And remember, small cap growth was the one that got crushed last year. Small cap value actually kept up with the major indexes and came in with virtually the same return as the S&P 500. So it wasn't that small caps underperformed last year. It was that small cap growth underperformed, and those value areas showing a ton of relative strength. As long as we're above those lows, have a ball, go nuts, own as much as you want.
Yep.
Right.
Lots of tops. So the list of distribution patterns, like the ones we were just talking about, that are resolving lower continues to grow. Do these charts whip it higher from here, or are these valid breakdowns?
Listen, they better. I mean, listen, we've been in this business for a long time. We've seen stranger things. We've seen tops completed, breakdown, and then quickly reverse, and then you get the ripper. But as long as we are below former support, and here's a good example here, we're looking at Europe, below all of that former support. Here's the All Country World Index, ex-US, below those 2018 highs. We continue to bring that up, right? How are they relative to the 2018 highs? You look at developed markets outside of North America, again, flirting with those 2018 highs. Same thing with the VGK, same thing with the ACWX. If those indexes are below the 2018 highs, I think we need to lean more neutral, lean more negative. They really need to stick that. And granted, as we're recording this, it's Thursday. The market in a lot of areas had key reversals today. So we'll see how we finish up the week.
Right. So you make a good point. Those 2018 highs that's a critical level, right? So there's a confluence of interest when you look at like the EFA and VGK charts, right? Not only was this, topping pattern playing out for 12 months, but now it just was completed to the downside right at the 2018 highs. You don't want to see prices hanging down there for more than a couple days. If this damage is going to be repaired, it better be repaired very soon. I would also point out industrials. We talk about this one a lot. Probably one of the most important charts in the entire stock market due to its high correlation with the major averages. You don't want to see this top completing to the downside. I think we still have a chance to whip it higher, and this could just be a shakeout.
All right, agricultural commodities have been on fire since Q4 of last year. Are we buying these new highs?
So Russia actually has a lot to do with agriculture. They're the world's top exporter in wheat. So if you look at the wheat contract today, this is a beautiful base. We talk about how we like to buy smiley faces. Well, this is what that looks like. In the entire grain space, you're seeing that, whether it's soybeans, corn, wheat. There's a couple of different wheat contracts. They all look good. They're all completing these major bases. But I think with the headlines that we've had recently, you tend to see blow off tops during events like these. So with the Russia-Ukraine headlines going on. I think you want to be careful. There's probably some backing and filling in order for commodities in general.
Yeah, no doubt about it. And I think that it's important to recognize where the relative strength has been within that group in the stock market. You have a lot of stocks like in the agricultural input space that have been really showing a ton of relative strength, continue to push up against new highs. I like buying breakouts in those groups. So for me, I'm less of a, wheat futures trader and more so use the information from the wheat futures market and soybeans and some of these others to help make better decisions in the stock market, which is really where I live. That's how I look at that. How do you feel about that?
You're absolutely right. I couldn't agree more. And I'm the same way. The chemicals industry, particularly like fertilizer stocks, whether it's CF, FMC, Mosaic, Nutrien, Corteva, all doing really well right now. So, yeah.
All names popping up on our scans.
Yes, they are. Strength in gold, huh? I know you like this one. Gold hit its highest level in almost 18 months on an intraday basis today. The move was faded. How are you trading this?
Yeah, I mean, listen, gold is doing things that it hasn't done in a long time, right? We've got a new all-time high in gold priced in Japanese yen. And, to your credit, you're always like, well, if you price anything in Japanese yen, it's going to look good. But still, I mean, I'm not one to shy away from new all-time highs. To me, that's impressive, particularly for something that hasn't done and made new all-time highs in over a decade. So, yeah, I think that stands out. I still think that we want to look to that area. Metals in general have done well. Base metals have done great. It's really been the precious metals that have been struggling. So I continue to want to look towards that area. We're getting more and more stocks within the gold mining space. A lot of these Canadian miners popping up on our scans, popping up on the new highs list. I'm cool with that. I'm paying attention.
Yep. When you look at just the chart of gold, I think there will be plenty of time, right? If this really is a valid upside resolution from this base, look at this beautiful base, decade-long base. If we're really going to break out from here, you're going to have plenty of time to get involved and make money on this trend. I think it could still be a little bit messy here, right? Because there's still a lot of price memory from the past 2 years. So I don't think it's something you need to rush into. It does seem like it's materializing into some sort of upside resolution, some sort of nice breakout here. But I think you could be patient with this. The other thing I would say is whenever you get these types of big moves like we had today in gold and crude oil from geopolitical headlines, you kind of want to be wary of it. I kind of prefer to fade those moves.
If West Dome, WDOFF, it's a $1.5 billion gold miner. If we're above those former highs from the fourth quarter, I like it long. If it is a failed breakout and needs further consolidation, fine, that's cool. We'll try it again. But I think from a risk versus reward, a lot of relative strength in West Dome. And if we're above those fourth quarter highs, you got my blessing. I like them long.
Another one that popped up on our ADR scan, Goldfields, GFI.
Yep.
Really good looking gold chart there too.
Classic from back in my gold bug days in the 2000s. Yeah. Some of the most beat up stocks are testing key former highs. Are these laggards finally making a tradable low?
I think so, but I won't know until more data comes in. If I was a betting man, I would say yes. I think this chart illustrates it as good as any. So ARK is now back. This is the flagship ARK ETF, the ARK Innovation, ARKK. It's right back at those pre-COVID highs from early 2020. Seems like a logical level to dig in and form some sort of tradable low here. And you also have a really nice bullish divergence in place. When you look at the components of the ARK ETFs also, there's, I think, a lot to like from a mean reversion, more tactical basis.
I love the fact that we're back to the 2020 highs. Talk about coming full circle. I really like the DraftKings that you mentioned before, back to those 2020 highs, potential double bottom. But a lot of these things are a similar trade, right? Robinhood, again, off of the early January lows. I think that the trade here, and it's in a lot of these, ARK, you look at biotechs, I mean, just go down the list of all of those beat up areas. It's the January lows. If we're above the January lows, I think you can be as long as you want to be long. Like, just go nuts. To your point, we were talking before air about certain longs that you have on. I have no problem with that. The January lows, that's the pivot level. If we're above that, have a ball, but understand if you're going to be in that trade that this is a mean reversion trade. It doesn't mean that we're in an uptrend. It doesn't mean that Peloton is going to be the next Apple. It's a mean reversion trade, and as long as you understand that, I mean, listen, everybody does whatever they want. We're all adults. But in my opinion, I think it's advantageous to understand that this is a mean reversion trade, understand the context of which this is happening.
Yeah, I think that's a really important point. Use those January lows to define your risk. You're right there. So if you do lose, or if you are wrong about these trades, then you can get out with very minimal downside. It's always nice.
Let's play a little game.
So this is a game that we like to play where we say the first word that comes to mind. Today's phrase, very top of mind, dead cat bounce.
And the first thing that comes to mind is this might be one, right? We've seen them all the time. Here we are talking about potential mean reversions, and a dead cat bounce is essentially that. It's a mean reversion within a downtrend, right? The dead cat that bounces and then rolls over and makes new lows. One thing that I've learned in my career about these dead cat bounces, about trades just like this, reminds me a lot of January and February of 2016. It reminds me a lot of that. And at the time, I was in the doom and gloom camp, and I was totally, this is a mean reversion. We're going to fade the heck out of it. Our upside targets were basically hit in April of 2016. And then we consolidated sideways May, June. And then in July, we started breaking out again. Until we broke out, I was convinced that we were going to roll over. And then the market proved otherwise. So what's the lesson? The lesson is, if the trade is a mean reversion trade, understand that I can tell you from experience, it would behoove you to keep an open mind down the road that maybe it's not just a dead cat bounce and potentially this is something bigger, because these are lessons I've had to learn the hard way.
Yeah, there's not much I can add to it outside of that. The primary trends are still lower, so it is important to know what you're trading. These are very, very short-term trades if you are putting them on. They could turn into something bigger, but let's wait and see.
And don't be stubborn, right? What Strazza just said, they could turn into something bigger. Maybe they do, maybe they don't. That's not the point. The point is be open-minded, because at times, 2016, fortunately, I had already learned to be more open-minded. Took me maybe a couple of extra weeks more than it should have, but fine. There are people who stayed closed-minded and missed the whole thing. So stay open-minded. Even if you think it's just a mean reversion trade, that can change. We can get more data that would just make us reevaluate that mean reversion dead cat bounce thesis, that perhaps maybe it's something larger. Remember, the biggest moves need to start out with small moves first, right? It's just math.
Right. So this could be that, but right now, like if you're trading it like I am, treat it like a dead cat bounce, which it is, until it isn't.
All right, so we've been joking internally, 2-minute drill, that the list of new highs is a lot longer when you include ADRs. So we ran our junior ADR list. Number one, you want to explain to the folks exactly what the junior ADR list is, because that's something we just invented, and what stood out.
So what this is, we're already covering ADRs, the big boys, in our International Hall of Famer scan, but that's just focused on the largest ADRs that are publicly traded. This scan is looking for ADRs with a market cap between 1 and 35 billion. There are no restrictions as far as industry group is concerned. And then we're just scanning for strength. And while most US stocks are nowhere near new highs, there is a lot of, there are a lot of standout outperformers when you look internationally. The ones that stand out to me are these airport names. So I'm going to just butcher these names. So I'm just going to give you the symbols.
Strazza, give it a shot.
Grupo Aeroportuario. Why is there a U in there? Del Pacifico. That's PAC. And the other one's Grupo Aeroportuario del Sureste, ASR. Sureste. Yeah. So both of them, really nice structural uptrends. They've been basing probably for the past several years, and now they're both resolving higher from those bases. Super bullish on these names. I like them a lot. And I also like the fact that airport stocks are doing well, because that probably means something good for the economy and the world.
Yeah, just this is Grupo Aeropuerto del Pacífico. So I would imagine that this is the airport that's on the Pacific side of Mexico, while this is the airport that's in the southeast side of Mexico. Because
there you go.
You see, maybe that's my fundamental analysis of the day. Boom, there you go. So yeah, completing these bases. But look at a few others. This is Everest Re, which I think is hilarious. This is a reinsurer that got the ticker Re. So that's just straight props right there. If we're above the 2020 highs, call it 295. I like it long, 50% of upside. And then you mentioned this one. Well, this is Arch Capital. So this has nothing to do with Arch Coal, but it's, or Arch, Arch Resources.
Yeah.
It seems to me like a lot of the Arch stocks are doing well. This one we're looking at a Bermuda insurance.
Not to be confused with Arch.
Oh, very, very different. Very different. There's an H there. And then this is one of the nicest out there. This is Israeli tech stock, Checkpoint Software. Definitely one of your personal favorites.
Yep. This is my favorite chart right now in the entire stock market. This is a cybersecurity stock from Israel. You're not going to find any software stocks that are trading at new highs right now. Look at that daily candle. That's amazing. And that's pressing on new all-time highs, resolving from a massive base that goes all the way back to the .com bubble highs. It's been consolidating above that level for like the past 3 years. So there's probably a lot of pent up energy for a fresh up leg. And I think that's exactly what we're going to get.
By the breakout, baby, Israeli tech stocks. Final word, Strazza. What are you leaving them with?
I'm very bullish on Miami right now for a lot of reasons. You laughed at me. Maybe this take is a little bit aggressive, but what's going on in Florida, Southern Florida, and mostly Miami right now with the crypto or digital asset world reminds me of Wall Street in the 90s, Silicon Valley earlier in my career. It seems like Miami's doing all the right things, positioning themselves to really be the leader in this new space, Web 3.0, metaverse, crypto, whatever it is. They seem to be on the cutting edge. And very happy for them and glad that I live only 3 hours away.
I'm glad I grew up there and get to go whenever I want. Got a nice little direct flight down to Fort Lauderdale. No big deal. So now as the world is coming back to normal, hopefully I can find myself in Miami much more. I'm actually going in 2 weeks and I look forward to seeing you there, I hope. And so what am I leaving the folks with? You said something the other day. They're like, oh, JC, this is the first time in my career I've ever seen anything like this. I never thought I would see this. And what I told you is I'll tell everybody else, like, listen, it doesn't matter how long you've been in this business. It doesn't matter how long you've been doing this. What Strazza said, you're going to say to yourself a zillion times, like, wow, I've never seen this before. Wow, I can't believe that this happened. I would have never guessed if you would have asked me 10 years ago that this would have happened. Yeah, get used to it. That's the market. That's one of the things that makes the market so awesome. It's never a dull day. There's always something new. There's always a new pattern. There's always a new story. There's always a new point in time that you will always be able to look back on and be like, man, I remember that. I remember where I was. I remember the stock we were buying or the stock we were shorting or whatever it is, right?
Yeah. A quote that I love is, I think things that have never happened happen all the time. So.
Oh, that's true. Especially in the market. People are like, oh, this is the first time in 30 years that this happens. Like every single day, something happens in the market that's never happened before or hasn't happened in a long time. Just remember that. So everybody, thank you for watching. Make sure to give us a like and hit the subscribe button below so you never miss an update. And follow me at All-Star Charts on Twitter. And be sure to follow Steve at Strazza and leave us a comment and let us know what you think. See you next week.
Peace.
Adios.